Hey guys, so today we're going to be using our 10 plus stock investing checklist to analyze a company that we all know and some of us love, and that's Facebook. All right, so if you're like me and you're interested in stocks, um, you may have come to the realization that you need a system to help you know which stocks to invest in and which ones to leave alone. All right, so many people just buy stocks based on whether they know it or not, whether it's a household name. But using our 10 plus stock investing checklist, we're going to show you how to analyze a company to see if it's really worth investing in or whether you're just throwing your money away. All right, so if you want more information on that system, check out the link in the description below and we'll run through that process for you there. All right, so jumping straight into it, Facebook. The first question that we need to ask, according to the checklist, is revenue growing? If you just hump on quickfs.net, type in Facebook, you'll see this information come up here. And so the first thing we're going to look at is the revenue growth. So you can see from 2011 to current, Facebook's revenue has moved from 4 billion to 112 billion, which is a massive increase in the revenue. All right, so that's a definite check there. Moving on to the second question, is it profitable? Now, this might seem like a silly question to ask yourselves, but a lot of people invest in companies which are not actually profitable. And so to just verify that, we look at the net income and you see that the profitability has moved from 1 billion in 2011, increased steadily over the past couple of years. It was about 10 billion 5 years ago, and it currently sits at $40 billion per year. So again, profitability, another massive check mark. All right. Third question, is free cash flow increasing? Now, free cash flow is related to profitability, but it's a way to more closely examine whether company is actually profitable, because due to different accounting tricks, a good accountant can make an unprofitable company look profitable. So we go now and we see under the key ratios tab, free cash flow moving from 1 billion 10 years ago to 24 billion presently. All right, and you can see it's been increasing pretty steadily in the past 5 years or so. So you can see that's what I like to see, gradual improvement year on year. And so Facebook is looking pretty good so far. Next question, do they reliably pay a dividend? Now, I don't actually think Facebook pays a dividend. Let me just go to the cash flow statement. Okay, so Facebook does not yet pay a dividend, but that's okay. Not all companies pay dividends. In fact, there's a strong argument that some companies are better placed reinvesting their profits to grow revenues rather than paying out dividends. And thus far, Facebook has not paid a dividend. And so the hope is that in a case where they don't pay dividends, that they reinvest that money to help grow the company even more. So we're going to look at that later on to see how successful they are in reinvesting that money rather than giving it to investors. Okay, so the next item on the checklist is more qualitative in nature, and that is how good is the economic moat. Now, that's not something I could find on a balance sheet anywhere, but it's something that you as an investor need to sit and think about whether this company has an endurable economic advantage or economic moat, as Warren Buffett would say. All right, and in the case of Facebook, now there are different types of economic moats. Um, Whether it's you have an advantage of being a major low-cost producer like Walmart, or you have strong brand association like Coca-Cola. But in case of Facebook, I think they have a pretty good economic moat based on the network effects. Now, a big push for persons to join Facebook is that other persons are on Facebook, and that is a deterrent for them joining another social media platform, in that there may not be many users there. They might not be able to chat with their friends there. So Facebook has a huge advantage over an upstart social network, in that they already have a massive existing network, and so that is a pretty strong economic moat in my opinion. Next, I like to look at the debt. Does the company have too much debt? Is that debt going to become a risk in the short or even long term? All right, so we jump over to the balance sheet and we're going to scroll down looking at total assets. So we see that total assets for Facebook comes up to uh, $159 billion with a B, whereas their total liabilities only amount to $31 billion. So you see that Facebook has quite a lot of assets to cover any challenges they may face with debt. And I also like to look at short term or current. Whenever you hear current, think short term. The current assets versus the current liabilities or the current ratio. And so for current assets, we have $75 billion. And for current liabilities, only $14 billion. So Facebook has a lot of money, a lot of cash on hand, and it could easily take care of all their debts without blinking an eye. So Facebook is at very little risk of going bankrupt anytime soon. All right, so moving on to the next item on the checklist is how good is the management? And what I like to do is to actually look at management performance over time. And so going down to the key ratios section, we're going to look at return on invested capital. And you could see that the return on investment capital has increased steadily from 2012 up to present. And for the most part, it's around 20% range, sometimes a bit above, sometimes a bit below, which is pretty good. Return on invested capital, for most industries, anything above 10% is pretty good, but it varies from industry to industry. So a good thing to do to follow up on this is to compare Facebook's return on invested capital to, similar types of companies, but just on its own, 23.4% in 2020 is pretty good. All right. Next question is, does the management own stock? Now, what I do, I usually jump over to another site called Yahoo Finance, and I can tell you I did research on that already, and the CEO, Mark Zuckerberg, owns quite a lot of Facebook stock, and in recent times, the company, the executive team has bought a lot of shares, bought more than they sold actually. So that's a good sign when the executive team is invested in company as alongside you rather than selling. Next, we're going to do something that most people don't pay attention to, and that's whether you're being diluted or not. So we jump over to the cash flow statement and we check net issuance of common stock, and we see that in the past 4 or 5 years or so, Facebook has been actively buying back stock, meaning that if you own Facebook shares, you own a larger and larger portion of the company when they buy back shares. So that's actually a good sign, in that you as an investor are not being diluted and you're gaining more and more percentage ownership of the company. All right. And so the last step in the investment process on the 10 plus stock investing checklist is, am I buying at a discount or with a margin of safety, as we say in the industry? Okay. All right. So there are a couple ways to examine whether you're buying something at a discount, and you could use both fundamental and technical analysis. I like to use fundamental analysis to get an idea of whether this is within the strike range of something that I might be interested in, and technical analysis to identify what is a good entry point. So I try to use both of them together. And so from the technical side, what I like to look at is the price to earnings ratio. And so jumping over to the key ratios tab on quickfs.net, let's look at the price to earnings ratio of Facebook. So scrolling down to the bottom. So in the past 10 years, you see the price to earnings ratio has been gradually decreasing from well over 1,000 to under 100, under 50. about 4 or 5 years ago, and now all the way down to 26.7. Now, most people tell you that, to be considered a value stock, a stock has to be valued under a PTE, a price to earnings ratio of 20. And the price to earnings ratio is simply the price of a share divided by earnings per share. All right, and that's a pretty dogmatic view of how to look at value. And for a company like this, I'm not too dissuaded by a PTE ratio of 26.7. All right. So another avenue I like to look at is the how does it compare to the simple moving averages, or which is a technical way of looking at is the price below the average prices in the past. And so we're going to jump over to another website I like to use, Yahoo Finance, to analyze that. All right, so jumping over to yahoofinance.com, pull up Facebook, and I go to the charts, and I have a few simple moving averages already pulled up. I have here Facebook's stock price, and the red line represents the 50-day simple moving average. The yellow line is the 100-day moving average, and the green line is the 200-day moving average. Now, I use it slightly different from most people who trade using technical signals, because I'm more interested in long-term investing. Okay, so as we can see here, Facebook is below the 50-day and the 100-day moving average, and a little bit above the 200-day moving average. And so for someone who's interested in investing long term, I think that's a pretty good signal to me. It means that it's slightly below the price that it's been at for the past couple months. And so as an investor, once you're confident that this price decline is something temporary and is not symptomatic of a terminal decline in the quality of a company, I think that's a pretty good sign for whether you should invest in the company or not, in that it's below its average price in the past. All right, so that was my analysis of Facebook using our 10 plus investing checklist. And remember, this is just a preliminary screening tool. This is just to help you decide whether to do further research, whether to do further analysis of a company that you're thinking about investing in. And so I hope that it was useful. If you're interested in this type of content and want to learn more, check out our Patreon. Our Patreon starts at only $1 for a limited time, and you can get to learn more about investing, learn more about real estate, learn more about finance. And also check us out on social media. We're active on Facebook, TikTok, all the usual platforms. All right, so check you again sometime. Peace.